Okay, good evening, ladies and gentlemen. I hope you've had a good week so far. Thank you, everyone, for joining from wherever you are joining us. Please let us know. Can you kindly um, put on the chat box which state you're joining from, just for us to have a feel of where you're joining us from? Please type on the chats. Let's know where you're joining from. Good evening. Welcome, everyone. I hope your day has been good and the weekend is starting on a very strong note. So please feel free to put on your chats where you're joining from. Okay. You see me joining from Delta State. Thank you, me. Who else is in Delta? Okay, while we wait for that to come in, tonight we are having yet another rich and engaging moment. Sorry, Ma, if you could just share your screen again.
Okay, you're not seeing
Yes.
my screen now.
No,
I should
no,
share.
no.
Okay. Okay.
Please.
No problem.
Great. Okay, so we see more people joining us from Abuja, from Nasarawa State. I'm sure we have a couple of people also from Lagos. Nice to see every one of you here. Thank you for being here. Tonight we are doing another masterclass, and I will tell you, this is indeed a masterclass, and I will tell you why very soon. And it is going to be anchored by none other than yours faithfully, Madam Ngozi Henrietta Stanley Obi. I'll have the privilege to introduce her to you. She's someone you will love to listen to, and she's well versed and experienced. She's a leadership coach, a human capital development expert, and is the CEO of Bridgemind Consulting Limited. She's a seasoned business leader and passionate uh, She's a seasoned business leader and passionate human capital development advocate with over 2 decades of experience in banking, strategy, and leadership development. She is an alumna of Lagos Business School SMP 40 and a fellow of the Chartered Institute of Finance and Control of Nigeria. She is also a certified DDI trainer and action learning coach. Her leadership journey has earned her recognition as a new leader for tomorrow by the Crans Montana Forum in Brussels. Ngozi has held several senior roles, including Regional Service Manager at First Bank of Nigeria Limited and Managing Director and CEO of a state microfinance bank, where she led impactful service transformations and financial inclusion reforms. Currently, she serves as faculty at Rome Business School and leads Bridgemind Consulting Limited, helping professionals and organizations build sustainable growth models. She is also the author of The Blessings of Job Loss, a powerful reflection on resilience, reinvention, and purpose. Ladies and gentlemen, you see that the speaker tonight is indeed well versed and experienced, and the best person to speak to us tonight about these concepts. Ladies and gentlemen, please make welcome our guest speaker for tonight, Ngozi Stanley Obi. Thank you very much. Oh, the floor is over to you, ma.
Hello. Good evening, everyone.
Good evening.
Hello. Good evening, everyone. Can
Good
you guys
evening.
hear me?
Yes,
Yes,
ma'am.
yes, yes, we can hear you. Sorry, I forgot to mention before you take it over that you are seeing me today standing in because Dr. Liemi is currently uh, on his way back to Lagos, and he's not able to join us despite everything he has tried to. But he has promised once he lands in the airport, he will be joining briefly. So we look forward to seeing Dr. Olimi join us very shortly. Meanwhile, I'm standing in for him, and my name is Tochukwu Ume. Please, Ma, over to you. Thank you very much.
Okay, good evening, everyone. It's an honor to be here tonight. So let's start this. So what I was doing differently today, we're going to be talking about basic finance for HR professionals. As a HR professional, there are some languages, there are some things we must know about finance. And that is exactly, oh, my network is, hello.
We can hear you, Ma. Go ahead.
Okay, I think I have to reshare again. I'm losing network on my list. Sorry.
Okay, no problem.
The Zoom has even gone up here. Okay, 1 minute. Okay, so we're going to be doing. Can anybody answer this simple question? When you hear about finance, what do you think? When you hear about finance in the office, when you have to deal with the financial director, CFO, when you have to go and when you hear, what do you really think about it? When you hear about finance, what's that thought that comes to you? I would appreciate that someone can answer that question. When you hear about finance, what do you really think? Okay, I'm coming on back. Okay. Okay. Hello. Yes, Kate. Yes, I can hear you. Hello, Kate. Yes.
Okay, I said I think of accounting when can you hear me? I think of accounting when I
Yes.
think of finance. Accounting.
Okay. When you hear about finance, you think about accounting. Okay, that's a good one. Okay.
I think about
Who else
money
has?
and how it is spent, Mom.
You think about money and how the money can be spent. Okay, that's a good
Yes.
one. Okay, so when you hear about finance, you think about money and how money can be spent. Beautiful. Who else has a different view when you hear about finance? What comes to your mind? What comes to your mind when you hear about finance? What is that thing that you think about? These people have come again. Do you have a CFO that you have to defend every cost to? You want to buy something. There are things that you think the office needs, and someone is telling you no. Does anybody have that experience? So we're going to learn some things today. We're going to run through, basically, there will be a quote. I'm going to discuss financial literacy for HR professionals. We're going to be looking at financial statements, how to read them and understand them. I'll also give you tips on HR metrics that are linked to finance. And also look at budgeting and cost management. It's going to be an interesting class. Just by the end of this session, I expect you to be able to communicate HR initiatives confidently using the language of the right language, the language of finance and business performance, equipped with a foundational understanding of key finance concepts, tools, and financial statements that will enhance your strategic decision making, your budget accuracy, and your talent management impact. I also expect you to understand basic financial principles that drive organizational performance. Why does the CFO say yes to this and no to that? Why do we need to do this and that when it comes to finance and accounting? We're also going to link HR decisions, hiring, training, compensation to measurable financial outcomes, and prepare and manage HR budgets effectively using data-driven insights. So let's do this. So I'll start with a quote, and then the quote says, Peter Drucker is a leading management, he's known internationally, and he said that what gets measured gets managed, and what HR measures should connect to business outcomes. So if you're in HR and you know that measurement is about how people work, because if you can't measure anything, wow. Tochukwu, you need to give me 5 minutes. I want to change my network. I'm having issues with this network. Okay, let me just switch it here. Let me switch to the Airtel. The one on the laptop is giving problems. Sorry, guys. Okay. Let me use the one of Airtel. Okay. I hope you guys can still hear me. My apologies. I want to switch the network. It's having problems. Let me switch to another one. But the one on the phone is a different one. So let me use that. Okay. Mm. Mhm.
Oh, sincere apologies. I think our speaker is having network challenges. I hope she fixed that quickly and join us again. Yes, I see William says I'm already loving the session from the training outline. Indeed, the training outline is packed, and seeing the profile of the speaker, you know what we are in for tonight. So it's going to be awesome and mind-blowing. So please stay on the call. Don't
My
step out.
apologies.
Join us briefly.
Yes, I'm
Yes.
back. I'm back.
Welcome
I'm back. Sorry. I'm back. It's stormy here. I think it's not raining, but something is happening. My apologies. Let me see. Let me log back on. Okay. 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 Okay.
Yeah, we can see you now.
And you can see my slide.
It's coming up. Yes, we can see it now.
Okay. Every HR, welcome everyone. Welcome, welcome, welcome. My apologies for the breaking transmission. Every HR decision has a financial consequence. Every HR decision has a financial consequence. So whether you're that makes sense and stories that move the decision makers. So, like I asked earlier, finance feels like what? In one sentence, what does finance feel like? Sorry, it's echoing.
Go ahead, man. We can hear you now.
Okay, so, but it's echoing. I'm hearing that echo. Huh?
Okay, so let's mute this and unmute here. Kindly unmute on your other device so we can hear you.
Hello, can you guys hear me?
Yes, we can.
Okay, every HR decision has a financial consequence. So whether you're hiring, whether you're training or rewarding your employees, someone in finance will always ask you the question, how much will this cost? So today we're going to explore how to answer that question confidently with numbers that make sense to us and stories that will move the decision makers. So finance feels like, in one word, let's describe how we feel about it. Someone said it feels like accounting. Someone said it feels like, for some of us, it feels like that thing I told the CFO and he didn't agree. Why? So it feels like somebody is tracking what I'm doing. Okay. In reality, in real organizations, HR and finance, they're not enemies. They're actually partners in sustainable performance. The best HR leaders speak the CFO's language and can tell stories of impact and successful collaborations. So why is finance, what does it matter for HR? There are key points we're going to look at. HR drives performance, people initiatives equal to financial outcomes, return on investment on HR programs. Okay, what am I saying? HR drives performance. HR decisions directly impact productivity, engagement, and retention. So when you hire strategically, when you train, and when you have the right culture, it fuels the business outcomes. You're the ones that get the right people in the organization. You're the one that understands where the gaps are. You're the one that will make sure that the hiring is done right. And for example, a high-performing team reduces project delays and boosts client satisfaction, and that is the truth. So most times, someone will say, "There's no need changing the wheel. If a team is good, we don't need to tweak or change them." So usually for HR, when you have a high-performing team, it reduces, things get done fast. You can see as I'm having issues here, Tochukwu is there supporting. He's still, in the background. That is how teams. I watch football personally for things like this. I don't watch for the results. I watch for the strategy. Someone is in front, is passing the ball. Someone is picking it. A team is just less one person. They still go ahead and win. How does that happen? So really, for people initiatives who have equal to financial outcomes. So for every HR initiative, there's a cost and there's an expected return. So when you have wellness programs, the target for us HR is that you want to reduce absenteeism. When people bond, they're happier to come to the office. You want to lower indirect costs, people are not coming to work. So leadership development improves decision making. I remember as the leader, the first time I went for emotional intelligence course, that totally changed my leadership style, So there are a lot of things that we do as HR to develop the people and make them better. And this also helps the organization to get better financial results. For example, a company invested 5 million in training and they saw a 20 million increase in sales. Each time we have customer service, sales training, the organization always comes back to say, they have not done these things. Because when you bring people together, train them, yes, it's going to cost something. But at the end of it, you hear their concerns. And the organization addresses that. There's always the boost. Revenue comes in, and so the HR impact is quickly felt. So your point, your partner is, if you're working closely with the finance people, when the organization needs that kind of support, when a boost is needed, and you can bring that in immediately. So return on investment on HR programs. HR must always measure and communicate the right return on investment. So when you're telling them, use metrics like cost per hire versus quality of hire. It's going to cost us this, but this is what we're going to get back. Training, return on investment, performance gain minus costs divided by the cost. All this is about reducing turnover, because the more people are engaged, the more they are with you. And the more you try to engage people, you also know those that are disengaging, kind of. That is, I'm not doing right, and that is I would do better so that the staff will work better and the organization will get more from these people. That is you're in the middle. That is your role. So HR in numbers, for example, if you have cost per hire 350,000, then turnover cost, after you have trained the person, after you have done a lot, at the point of exit, it costs you 350 to train that staff. At the point of exit, it costs you 1.2 to lose that staff. That's serious. All because maybe you didn't engage the person well to even know where the satisfaction came before the person resigned. There's a funny story of a training, two banks in Nigeria. One takes staff for 6 months, trains them. At the point of releasing them, at the end of the training, those are passed, they will give them letters to resume on Monday. And that bank will be waiting outside the gate. Seriously, true story. And they will employ these people. So it's like you gave somebody employment on Monday, the Friday, Monday says it doesn't want to work for you. And then, by the time they found out, they now had to start their training. The 6 months training was more like secrets. They no longer do it in their training school. So being HR people must always have our return on training. What normally is 3 times productivity boost. When you get your staff the right skills they need to perform, when you engage them, when you hear their concerns, they actually go out and deliver 3 times the productivity that they usually would have. You can imagine that kind of boost. So there's a lot happening. So HR needs to understand the numbers, and the numbers are, when you use this, look at what comes out of it. So cost per hire might be this, but at the point of exit, look at what the organization can be losing just because we as HR didn't do our part of understanding the figures involved in this. So this is basic finance concepts that every HR professional should know. We have assets, liabilities, equity, income versus expenses, profit versus cash flow, budget. Can anybody tell me what any of this means? What is an asset? What is a liability? Anyone that just let's share. What is an asset? In HR, what we call an asset? What is a liability? What is equity? Income and expenses, profits versus cash flow, Budget versus, okay, I think you're muted. Okay, sorry. So these are basic financial concepts for every HR professional. So an asset, these are what an organization owns. These are resources that have economic value and can generate future benefits. For example, as a HR person, your training equipment, your software, your employee laptops are all assets. If the organization owns the building that you guys are in, it's an asset. Even people, though we don't record that people are financial assets, but staff are also assets. So their strategic assets, their skills, their experience, and their productivity contribute to the organization's long-term value. Our people are actually our number one asset, even though that is not captured in the balance sheet. So when HR designs a leadership development program, indirectly, it's increasing the organization's human capital asset value. So HR decisions that boost capability, HR decisions always boost capacity, capability, retention, and engagement. They increase the value of organizational assets. Yes, we said human beings are the number one strategic asset, but other assets are there. So by the time you're intentional, it's the sure you take as HR to boost capability, to boost people. Because if we look at it here, it costs you 350,000 to hire. At the point you've trained and gotten the person to be what you want, the person leaves, you're losing as much as 1.2 per exit. That is high. The margin is just too much. So doing the right things to get people engaged, to get people in the organization, that actually helps a lot. That actually helps a lot. So that actually helps a lot. That actually helps a lot. So HR decisions boost capability, they boost retention, and engagement increase the value of organizational assets. So what are liabilities? An asset is what you own, what you use to run your business. Liabilities are the opposite of assets. They are what you owe. The other one belongs to you. This one is what you owe to others. Obligations that must be settled in the future. HR example, we have accrued salaries, we have pension obligations, or severance pay. They're all liabilities. And I will say to HR today, please, let's have a payment date. As organizations, I will say to you that there is a range. There's no, for us to get it right at HR, we must always engage management and make sure on this particular date, this is the day people receive. If it falls on a weekend, we'll do it before the weekend. Let us just be on that. That's right. So when we have accrued salaries we have not paid, it's a liability. When we have pension obligations, it's a liability. When we have let someone go to their destiny and we have not paid them their severance pay, these are all liabilities. So liabilities also have poor workforce planning. When we as HR, we don't plan well. When we have more than what we need or less than what will give optimal performance, these two, over, these two are not good for the organization. It can lead to higher liabilities through unused leave balances or redundant pay commitments. So when HR manages payroll, we manage benefits and headcount planning efficiently. It reduces unnecessary liabilities. So when you make sure that your staffing and everything around it is optimal, you reduce actually, it's better for the organization. So you don't have unnecessary liabilities. You don't have to sack people that you shouldn't have employed in the first place. So if your company promises leave encashment or end of service benefits, all those are liabilities on the balance sheet, and we must always prepare and plan for them. So equity. Equity represents the owner's stake in the business. So what remains after all liabilities are deducted from assets. Usually in any balance sheet, we'll have the asset side, then this will have the liabilities and equity. So for example, if your company, all you have in a company is 100 million, and those you're owing is 80 million, what is left is the owner's equity. So the worst case scenario, this company is shutting down today. What the owner is going with is that equity, that is the owner's contribution in that business. So equity represents the owner's stake in the business. What remains after all liabilities are deducted from the assets the business owns? We have a HR example. When employees participate in employee share ownership plans, ESOPs, or profit sharing, most of us, the organizations pay us profit share, part of. They are tied to company's equity. They're making you part of. The board is saying, as owners, this is what we have to share. We also think the way you work to your part, and that is always good. So these are things that also are incentives that people see and they say this organization is the best place to work. So HR's role is very key in building a performance-driven culture directly. This impacts profitability and therefore shareholder value. We have seen that incentives, when we tie monetary incentives to people's performance, we see people doing their work, giving it their best, actually, whether we like it or not. On this side of the divide, financial incentive continues to be a good motivator for people to do their work right or be motivated to do it exceptionally well. So every recruitment decision or productivity improvement influences the return on equity. So HR contributes to equity growth by ensuring that every employee drives value creation in the organization. I always ask, when we have JDs, everybody has their job roles and they have KPIs that we're tracking things that do we tie into the organization starts the year with strategy session. They've listed what they want to achieve. HR now takes this and breaks it down to every department's role in the bigger picture. Once we get it right and everybody's doing exactly what they're supposed to do, we always end up achieving exactly what the organization goal for the year is. So HR is a big contributor to this growth by ensuring every employee drives value creation. So if you call me tonight or at every point in time, I will know my part. Am I achieving it? Am I lacking? Am I over the target? I will always know. So we need to have the right kind of performance systems in place to be able to track everybody's part in the bigger picture. So income and expenses. For every HR person, what is income? Income is revenue. This is money that has been earned by the organization through their products or the services that they sell. Expenses, opposite of income. These are costs incurred in earning that income. Example, HR, the revenue comes from business activities, but you pay salaries. Organization pays training costs. Organization pays recruitment fees. Organization pays for pension. So this is how it is. So as revenue is coming from your business activities or your business service or your products, it's money you're earning. There are also expenses. These are costs you incur in earning that income. So income versus expenses continues to be a well-designed recruitment strategy or rotation program can reduce turnover costs, lowering expenses, and improving net revenue. So when you have a system where people are recruited strategically as you need, you don't let the gap be too much, or you don't even, and you have a retention program, people don't just walk away. People love say it's really a best place. It's not on paper. It's really, you want to turn. Culture is key in organizations. We've seen that people don't leave organizations, they leave their bosses. So as HR, it's also part of our job. So when we're looking at the cost of all this, income we're bringing people in is going to cost. We have expense, we're going to pay them salaries, and we've trained them. We've not really gotten the value of what we have put in them, and somebody gets them to leave. Some people call it jacket behavior. It's also part of our job to ensure that we track all that and make sure everybody understands the bigger picture. HR analytics can help us know if the cost per hire or training return on investment justifies the expense actually spent in acquiring this person. HR doesn't just spend money. It can actually help control costs and enhance income by improving the workforce productivity. This is key. Okay? Profit versus cash flow. Profit is what is left after all expenses are deducted from income. Cash flow is the actual movement of cash in and out of the business. HR want to have an idea. So that if you are planning that want to increase staff welfare, staff salaries, well, you're talking with facts. You're not just talking, say for saying to you, them say to you, what do you mean? Can't you see what we're going through? It's important that you know and read the financials of your organization. It is very key. At the end of the class, somebody should remind me to tell you why I say it's very key. So understanding financial statements for HR people, we have the income statement where the salaries, trading costs are there. We have the balance sheet, we have our HR assets and liabilities. We have the cash flow, which is payroll, timing. We have all that is there. So HR decisions don't happen in a vacuum. They actually impact a company's finances. So when you understand how HR actions show up in financial statements, it actually helps you align people's strategies with business performance. I said it. We are putting JADES, we are putting KPIs in place. When we understand exactly where the organization is going, we'll know exactly what to track. we're engaging the team. This is what each unit is supposed to achieve, because we have seen the financial metrics that the organization is hoping to end up with. So we know exactly what to do. So when you understand how HR actions show up in financial statements, it helps you align people strategies with business performance. So the income statement, profit and loss, is also called understanding financial statement for HR professionals. We need to understand basic financial statements. So when somebody brings the balance sheet, we don't the income statement is what is also called the profit and loss statement. Here you see revenue and expenses over a period of time, usually 1 year. So most HR costs are expenses that reduce profit, and that's the truth. Example, salaries, wages, they're always recorded as operating expenses. These are the costs of running the business, because you cannot run the business alone. You need people to help you, and their salaries and wages are part of the costs you spend in running the business. So we have, for example, when you have training and development programs, it's also an expense. It may be capitalized if linked to long-term programs in some cases. When you have recruitment costs, advertising, agency fees, and onboarding, this can impact the income statement. The truth is that every HR decision that costs money directly or indirectly affects profitability. So by the time you are deciding on whether to do this or that, always remember that every HR cost impacts the income statement. Actually, if, for example, we had 10 billion that was profit, by the time we add that cost, it will impact that. So this is very key. So we do the right programs, we plan it well, we'll make sure that we are not the one taking the organization the other way. So that's what I'm trying to explain. Understanding the balance sheet. Balance sheet is just a snapshot of the company's financial position at a point in time. It's always at a point in time. HR-related assets and liabilities are always reflected here. For example, HR assets, prepaid training programs, employee loans, or investments in HR systems. All these will be captured in the balance sheet. So it's always there. So we now have examples, HR liabilities. When we have accrued salaries, bonuses payable, we have pension obligations, we have severance pay. HR can actually influence long-term financial health of the organization through the way they manage liabilities, like leave accruals and investing well in human capital. That was an incident in an organization where I was. They were changing from one system to the other, and the HR forgot to capture, when they were doing the budget for the year, HR forgot to capture the promotions for the year. It was big. The head of HR actually lost her job. It was big. Between HR and finance, HR thought finance had captured finance, because in the old system it was already dead, because usually yearly you estimate this number of people would be. So the budget of the institution would change at the point when promotions are normally done mid-year, not at the beginning, but they will back pay. So it was a big deal. It was a very expensive mistake by the HR head, and she lost out. So you must understand liabilities. You don't just let salaries accrue and not make sure the organization has a plan to pay it. So bonuses must be paid. Pension obligations, severance pay. If people must be let go, before you let them go, there must be a plan so that they don't take the organization to court. You must always plan this. So the cash flow statement shows the actual inflow and outflow of cash in the company. The timing of these cash payments to employees and vendors is very crucial. I said at the beginning, I said we must always have a payment date. It worries me when people say there's a range, we pay between. No. As an organization, so a staff can say, if there's a gap, you could say, somebody give me this and I'll pay you on this date. It's very important, and it also makes people happy when people work in an organization that there has to be a day. If that day falls on a weekend, I repeat, you pay it earlier. So payroll timing, salaries are paid monthly or bonuses are paid annually. All this can affect cash flow. So we must understand the way it affects cash flow. To know, is the cash there? If the organization is struggling, might not be the time you're talking about bonus. So all this, that's why the HR and finance are joined together. One is not, it's like a trouser. You're actually in this together. So in the cash flow, we have reimbursements and allowances. People travel, labor codes. Cash outflows also need careful planning to avoid liquidity issues. So when we're sending people on outside courses or things like that, we must always check Do we have the money to pay for this? I did not tell someone that agreed, and later I cannot sponsor that. Every profitable company can face cash crunches. So if HR doesn't coordinate with finance on timing of payroll and benefits, let me repeat, no matter how profitable a company is, they can actually face a lull in their cash. They can actually face cash crunches if HR does not coordinate with finance on the timing of payroll and other benefits. HR needs to carry finance. They have to work together so that there are no issues about this. Okay, budgeting for HR professionals. So as a HR professional, there are key elements of what you do. You do recruitment, you do learning and development, you handle wellness. And all this has to do with costs. All of them has to do with costs. So it's going to cost you to bring in people, set up panel, get them interviewed, check their health status, everything before you can say to the team, I've got to be able for you to see. So learning and development, you see, if you don't sharpen the saw, you can remember the man that just kept cutting, and that person was sharpening the hair. If you don't sharpen the saw, your team will not give you what we've seen here, that when you train the team, that you have 3 times productivity goes high, 3 times what they actually could do before. Imagine that. So we have wellness programs. When you bring people together, just take them out, get them to bond, just pamper them, make them feel appreciated. This helps a lot in engaging staff. I know I enjoyed a lot of that in the past. You get people in the right frame to go there and fight for you, do the best they can for the organization. So we're going to look at the variance analysis charts. We're also going to look at justification. How do we link the KPIs to what the organization expects us to achieve? So look at this now. Why budgeting for HR actually matters? Sorry to say, most of us say HR is a cost center. I want to say tonight that HR is not just a cost center, it's also a strategic investment center. So you're not just a cost center, you are also a strategic investment center. So you're both a cost center and an investment center. Every HR should understand that today, that you are both for budgeting, yes, you're a cost center, but you are also an investment center. So an effective HR budget ensures that recruitment, development, and employee well-being initiatives align with organization's strategic goals. So your budget will capture that. Your budget will capture the recruitment, your development plans, and the well-being of the employees. Some people that are aware that work well. So we have to balance it. All these initiatives will align with the organization's strategic goals. So let's look at key budget elements here. So recruitment. For example, you have job ads, you have interview logistics, we have onboarding. These are things we have to do under recruitment. So for budgeting, we have forecasting. How many people would we need? We are going to look at that. Analyze cost per hire. What is it going to cost us per person? For L&D, learning and development, we have training, certifications, workshops. Are there ones we can do in-house? Are there ones we have invite facilitators? Are there ones we can send our team to go there and learn it? We need to align skill gaps and measure the return on investment on learning. That's this we call, how do you take training back to the workplace? So when people have gone on training and they've come back, you need to debrief them and ensure that what they have learned actually becomes part of what they're doing now. That's so the training cost is not a waste to you. So we need to understand, we need to align the skill gaps and measure return on investment. What is the return on investment on this learning? You used to produce this before. Since you have done this now, how better, how well, what happened, what did you learn, how can you impact others? Employee wellness, we have health programs, mental health support, we have fitness. Before this, some of us have, some of our team members have roles that they need mental health support. Are we giving it to them? I remember when I used to do a lot of counseling, in an organization I used to try. So I was told that for me to be doing that you are the counselor, other counselors also have to help you, because by the time people put all on you, you still have to help. So the organization will put that support in place. So it's good. We need to track engagement of our team, absenteeism reduction. I've seen that once you do this program, there was one big organization. They were having people were always absent, things like that. So when I was discussing with the HR and she was complaining, I asked her, do you do awareness? Awareness. For what? We don't have. I said, if you don't have the money to look after the well-being of your team, you'll be having disengaged team member because it's on all this social of the office. That you can see things that you can notice. Actually, you have to get people the right way. Compensation and benefits. We have salaries, we have bonuses, we have insurance. All these payroll software. All these are part of it. I want someone to ask me what is HRIS. I'm waiting. Benchmark to market, ensure internal equity, improve efficiency. Everything here is a HR payroll software. So it improves efficiency and automates reporting. So look at the actual here. For example, you did a budget that recruitment that you're going to spend 1 million on recruitment. Actually, you spent 1.2. So there was negative variance of 200,000. Wow. The network on the laptop is off again. My apologies. I hope you guys can still hear me. Let me log back in here.
Yes, we can hear you.
Okay, no problem. No problem. Let me log back in here and share again. Okay. So HR, any questions so far what I have been saying? Is there any question? Is there any concern? Is there any part of this or like, no, this is not true? Or this is true? Which one are we agreeing on? Okay. Okay. Hello. I can hear you guys.
Yes, we can hear you.
Okay. Yes, I know you can hear me.
Everyone, feel free to unmute and talk or use the chats in case.
Okay, you can use the chat, yes. You can use the chat. You can use the chat. Feel free to use the chat. Tochi, which network are you using where you are, please?
I am actually in the office, so I'm using the office
Okay.
Wi-Fi.
Okay, I think I need to get, okay, back.
You are back on now.
Okay, yes. Okay, so we're seeing that actual here, variance and actual, you had recruitment, you had a budget of 1 million, and you actually spent 1.2, so that was a variance of 200,000, 20% negative. So either you need more hires or the advert costs are higher. That's the interpretation of this. Learning and development, you budgeted 800,000. It actually cost you 700,000. So you had a positive variance of 100,000. Either you did not postpone the training or you were able to save something from being more prudent. We have the awareness program. You budgeted 3. So that's an example of how really budgeting can happen for HR. You budgeted 300,000. Actually, 350 was spent. You had a negative variance of 50,000. So this is it. So the question is, positive variance is under budgeting. Negative is over the budget. So positive is you have yes, you're able to do below, yes. Negative is over the budget. So we try to somebody will say it's not better that it's always a problem. The negative is always a problem. We always try to make sure we just get it right. But if it's just a little hair, but not getting it above might mean that you need more money. That project might not fly. If they release money to you and you maybe going to pay for things you need to do the project, and you find out that you actually did on the budget, it's an issue as HR because it means that budget will not fly. Will not fly. They might tell you why did you so when presenting your HR budget or explaining variances, always tie your spending to measurable business outcomes. It's very key. So recruitment, you're talking, this is how you're speaking now. We have time to fill, quality of hire, justification example. You're increasing ad by reduced by wow. Wow, God, this is something else. Hello. Okay, so let me take it back here. So as a HR now, you're explaining, we look at the variances here, and I explained that most times when you have negative variance, it becomes an issue because you're under budgeted and the money you have might not be enough to run that project, which is a big issue for your HR program. So when you're presenting your HR budget or explaining the variances, you always have to tie your spending to measurable business outcomes. Talk like, speak the language people going to approve want to hear. When we did training investment, it led to 10% higher retention. When we trained people on sales skills, when we did this, we had 3 times productivity out of them. The revenue increased. That's the kind of language they want to hear. When you do wellness, absenteeism reduced, engagement score went high, people resigning reduced, our turnover was nice. These are things. Wellness programs reduce sick days by 15%. These are the kind of things they want to hear. So frame budget requests as return on people investment, ROPI, and not just cost. Is key. We understand that. So quick exercise. Which HR budget item your organization often gets cut first? How can you justify it using data or KPIs? I will bring out the question later at the end of the class. Let me finish. So these are financial ratios every HR person should know. These are basic ones. What productivity ratio, labor cost, return on human capital, absenteeism. Let me show you how this for at least these basic ones you can calculate. So HR professionals don't just manage people. They also need to understand how workforce decisions impact, in quote, business performance. So these ratios will help you connect HR actions to financial outcomes of the organization. What productivity ratio? Formula. Productivity is equal to output all over the head count. What is it measuring for you? How efficiently your team organization converts human resources into output. Let me show you an example. So example, a sales team generates 10 million in revenue with 5 people. So you're looking at 10 million over 5, 2 million per employee. Why does this matter? It shows if staffing levels are optimal. It helps justify hiring or training initiatives. Let me now ask a question. The 5 people we have in that sales team, did they all bring in the same? This 10 million might be just 1 or 2 people. Might be one person did half of it. Might be one person did. So that is why we need to track. When we have tried the productivity, we now take it down. Each of the 5, what did each of them achieve? What can we see? Because if not, it could be the motivator. If you say the 5 of us achieved this, you need to break it down as HR. Each of us, what is our part in this? That's what gives staff the confidence to go out and achieve more than others. Because we have performers that will always outdo others. We have that, so it's key that we understand that. So it's not just about tracking. Yes, they produce this, but the 5 of them, who in the 5 actually did more and who did less? Who needs support, who needs encouragement is key. That this is always established. We have labor cost ratio. HR spending all over the revenue times 100. So here you're measuring the revenue we're spending on salaries. The management is always interested in this. Percentage of the revenue you spend on the cost of hiring people, the benefits, HR programs. This is very key. They are interested. An example, HR spent 2 million. Revenue was 20 million. So labor cost is 10% of it. So the organization is okay, it's okay. We're making 20 million and we're spending 2. It's a good business. It's very, very good. Why does this matter? It indicates the cost efficiency of the workforce. And when you know these numbers, you're able to do better engagement with management. It's a benchmark against industry norms because you want to identify over or under spending. So we have return on capital, human capital. We're looking at profit all over HR investment. We're measuring the financial return we get for every naira we invest in our human capital when we train, when we hire, and when we give them incentives. Look at it here. Profit is 5 million. HR investment is 1 million. So we are doing 5 times. That's big. So the profit we're doing 5 times. HR investment is just 1 million. The question is doing 5 times the HR investment. This is a good one. Why does this matter? It helps you justify. So when you want to get people more money, you want to get this is salary, this is where this ratio helps. The profit is here. And look at ahead. How many times? This is HR only invested, you only invested 1 million in HR. And this is what came out. So the management is, they're in a better mood to listen to you when you understand how to present numbers too. So it helps you justify HR programs as strategic investments. It also helps you show them which initiatives drive measurable financial outcomes. So formula for absenteeism, this another is absenteeism rate. You want to check how many people are absent. You are checking lost days over total available days times 100. It's measuring employee attendance and engagement. For example, lost days will have 50, total days will have 1,000. So absenteeism, 5%. Okay, you could say 50 over 1,000. Okay, 5%. So how can we make it better? Because there's no way you are going to get 100%, but at least 50% is fair. So it matters because when we have higher absenteeism, productivity loss, and higher labor cost per output, that is an issue. You're paying people, especially if you pay by month, people are paid and they're not in the office. Supports awareness, engagement, and retention initiatives. So you link all these to KPIs, recruitment efficiency, training return on investment, retention and engagement, all these trends over time to predict workforce needs and justify budget requests. So you integrate ratios in dashboards for data-driven HR decision. It's very key. So when you capture it like this, when you're going to management, you're using data to speak to them. It always makes you because it's about the numbers really. So it always makes them better receptive to your request. So strategic HR decision with financial impact. Example, workforce planning is equal to cost forecasting, performance-based pay, profit alignment. So what am I trying to say here? Every HR decision leaves a footprint on the organization's bottom line. This is how. When you plan workforce, smart headcount decisions help control payroll costs and align staffing with business goals. They want to achieve this. Do I have the right staffing to support this kind of initiative the organization wants? So that is what you're asking. When you have performance-based pay and you have profit alignment, it rewards the result. You don't ask that question. There are 5 that achieved the 10 million. In the 5, who achieved more, who achieved less? So when you reward results, not just effort, you're directly tying people performance to organizational profitability, and people are more receptive. HR is a sustainability driver. From culture to compliance, HR will always ensure business continuity and long-term stakeholder value. So let's have a scenario here. Company S reduced turnover by 30%, saving 15 million through engagement programs. What metrics changed? How did finance support HR? What would you do differently, okay, as HR, okay? The metrics that change: turnover rate, employee retention went high, turnover rate went down, employee retention went high, recruitment and onboarding costs went down because people were being retained, productivity and morale went high. Okay, we need to understand these numbers. So how does finance support HR? Finance supported HR by quantifying cost savings from reduced turnover, budgeted funds for engagement initiatives and track return on investment, analyze trends in payroll and benefits to ensure sustainability. HR created scorecards linking people's metrics to financial outcomes. So what would you do different as HR lead? We'll use data to track employee dissatisfaction before they exit. We will not let anybody, we must capture how people are feeling in the organization. We must strengthen career development paths to sustain retention gains. We must review compensation strategy for long-term alignment. Most importantly, HR must cross-functional collaboration between HR and finance from project to design stage must be in place. So at the end of this class, I want to say to everybody, HR must speak finance. Financial acumen is equal to credibility. People's strategy drives business results. So I end with this quote: numbers tell the story of a company. We all need to learn how to read them, and you will always know what's really going on. Robert Kiyosaki. He says, numbers tell the story of a company, and you and I must learn to read them, and you'll always know what's really going on in the company. So in conclusion, finance is not just for accountants. It is a language every HR leader must learn to speak. Finance empowers HR to move from intuition to influence, from support function to strategic partner. Thank you. Any questions?
Wow. Thank you very much. That was indeed mind-blowing. From your masterclass, I was taking some notes, and just quickly to summarize my notes, you made mention that HR and finance should collaborate and not compete. You also said that HR professionals should advocate to have a specific payday and not just a range, because it is actually a strategic tool for the organization's progress. You also said that every organization can face cash crunch. And that's why HR is not just a cost center, but a strategic investment center. You also said that key budget elements for the, you took us through the key budget elements for HR professionals, and also showed us the difference between the positive and the negative budget variance. You also highlighted the basic financial ratios that every HR professionals must know. And you told us that HR don't just manage people, but must understand how people decisions are made. Lastly, you said that we must learn as HR professionals to speak the language of finance. This has been very insightful, very rich, and in fact, something that I know we will not forget in a hurry. Thank you very much for that masterclass. Nobody could do it better than you have done it. Now it's time for questions and answers. We invite anyone that has a question. You can use the chat box. You can also drop your questions or raise up your hand so we can ask you to unmute so you can ask your questions. So she's still available to respond to our questions. Anyone with a question, please use the chat box, raise up your hand, comment, contribution, please, this is the time. Hello, Ma, confirm you can still hear us?
Yes, I can hear you very well.
Oh, good, good.
I can
Okay,
hear
so
you
we
very
have
well, yes.
Kate. Kate has a question. Please, you have the floor. You can unmute, Kate.
Good evening, ma'am.
Hello, good evening, Kate. I can hear you.
This was a very wonderful one. I was actually on my way home and I had to listen through. And this is it was quite engaging and enriching. Okay, so my question is this. You've said a whole lot of beautiful things, but I have a little challenge. In my current organization, we do budgets, but these budgets are not followed. In fact, the owner of the business doesn't care about our budget. The only reason why we do that budget is just so that we can use the budget to set targets for the salespeople. Okay? So what happens is, whatever budget we have set, we say, okay, HR is spending this, this department is spending this and all of that. The accumulation of all that, that's what we use to set a target and maybe do like a 30% on that expense, before we can now create the target for every other department. But the main budget itself, for instance, HR's budget, is not being used. We end up she doesn't pay attention to it. Like say recruitment now, for instance, we are not spending out of the recruitment fund. She doesn't release money for recruitment, so it's always like a general spend, So HR admin has impress, and we spend from those impress. How do I make her see reason why that budget should be utilized? In fact, to even get her to approve the budget and say, okay, this fund is allocated for this and all of that, and then people spend from what their budget is, so that at the end of the day, we can now say, oh, this was what was budgeted, and this is the amount spent on the budget. So I don't know. It's really a hard question. I don't know what to do.
It's an owner-managed business, right? It's an owner-managed business.
Exactly, yes.
Mm-hmm. And there's no CFO. It's the MD and the CFO at the same time.
In fact, the former head of accounts left, and before he even left, he was just like a boy because They in the finance department, the accounts department, they don't even follow budget. She can just call them up and say, pay this, transfer this. So nothing is tracked. You can't even track anything. You understand? You can't track it.
So how do you are you making profit? How does she know whether she's making profit or not?
And she knows because all the money goes into her account. And by the end of the day, and so yeah, we know there's profit because the account people also, when they send those things, you know, they are able to get the ones they can. You know, like someone in my department will always say, this account can never be balanced, and that's just the truth. It can never be balanced. Yeah, and because a lot of things are not tracked. A lot of things there's no name for such things. You know, like for instance, my doctor tells me, oh, transfer 1 million to Ngozi, Mrs. Ngozi, for instance.
I understand.
What is that 1 million? You don't know. So you just record.
You know, this is the challenge we usually have with owners that don't really understand the financial side of a business. It's working now because the business is having cash flow. But if there is a lull, I get what I'm trying to say. She's seeing money and she's spending it as she likes. Like when the economy is not too good and businesses are struggling, then that's when you would have said, that time I had cash flow, I would have spent it this way. Now, let me tell you how you explain to her the part of the budget that is good. Most times, like I like what you said, on paper, she only uses the budget to assign targets to marketers, right? That's her only idea of the budget. But in reality, in her head, she has her own budget. That's the truth. Maybe she has, you people have put on paper 50 million or something for HR. In her head, that's why you struggle to get her to approve. I get what I'm trying to say. On paper, she has done the big budget to use it to set targets for the team. But in reality, she has an idea. I get what I'm saying. So what are you're managing an owner manager. It needs a lot of wisdom and emotional intelligence. If she is more transparent, she will make more. But most owner managers, some of them don't really understand that part. So what are you going to do differently? Next time budget is being set, you will ask, politely, madam, this budget, is it too high or is it too little? Can we, how do we make it more realistic? So it's exactly what we are tracking people on. What do last year we made 50, as it is now, do you know the profit you make yearly? Does she declare it?
Oh, well, they declare what they want to declare. You understand? Yeah, like this year, like for last year, we actually even shared profit. There was profit sharing. But
that's beautiful.
The auditor said it is just what people want to declare that you declare because he knows what was the real this thing, you understand? And she knows what, like you said, it's in her head and she knows what she wants.
Honestly, it's not that there's no budget. It's not that there's no budget. She has her budget. What you guys are doing, the secondary budget. There's a master budget with her. The secondary one is the one she uses to drive targets. So you're dealing with an owner manager, and with them, it's a lot of wisdom. That was a lady that the husband invited me as a consultant to come. The business was making money, but she was running, just like what you're describing. Her expenses, she was running the business down. She didn't want. She was that particular lady. That particular case, that lady was actually the problem of the business. Honestly, the good setup. Everything was fine. All I did was, madam, and she loves to travel. She will just gather the whole profit, take off. They will start struggling again. The man has to keep bringing money. So, madam, since you like to travel, why not get an MT and then be free to travel? She said, Abi, as I'm talking to you now, she took my advice. The business is thriving now. This happened last year. The man keeps calling me to say, but how did you get her? And he has been trying to encourage her to at least let people run this thing to bring her money that since you like to be spending. So you just have to manage the person. There's a budget in your organization. It's just that she's not telling you this is the budget. She wants to use your own secondary budget to drive performance while she makes her own lean. That's just the truth. That's why you struggle to get her to approve some things on the budget. That is the truth. So, okay, thanks for that question. No problem.
Thank you very much.
Thank you, Kate.
Thank you. I'm not seeing any other hands up yet, but I see Chidi saying that this is great. I think we need to have another session on finance in HR. So, Ma, they're already asking you to come back again
I'm
for
available. No
second volume.
problem. I'll be back. No problem. And yes,
Yeah.
Tochi, you share the slides to them, right?
Well, if you want us to share that,
I don't
Dr.
mind.
Oliemi does not do that mostly. But
Okay,
if you
tell
want
them to
us
go
to
to
share
YouTube
that,
to watch. Okay.
yeah. So
Okay.
we'll
No
see how it
problem.
goes. But yeah,
No problem.
if he's
Okay.
back and decides to share, I'm sure he would find a way to share it for the participants, as he will possibly have their records.
No problem.
Okay. Do we have any other question? Okay, so I'm not seeing any other questions. So very quickly, this session and many other sessions are available for your enjoyment. I know that no matter how much you think you learned from the session today, there will still be something you want to, reconfirm, if I would use the word. So please make it a point of duty to watch this session again. And how do you find it? Just simply go on YouTube and type Oluyemi, and you will find here Oluyemi Adeosun. It will be the first option you will see. Kindly feel free to select it, and you will see this particular session and many other sessions that has been held on this platform over the year. We have sessions almost every weekend, and in most cases this year, during the weekday, we have sessions. You will find a lot of content on this place for your learning pleasure, and they are categorized. So please make do of this platform and come back to watch this session again if you want to. Lastly, just to prompt you, we have okay, so let me share the screen instead. Okay, so we have another session coming up on tomorrow, and this will be identifying and grooming high potentials. Please don't miss this session. It starts at 7 p.m. dot. And after that, on Sunday, we'll have another mind-blowing session tagged Transforming into an HR Superhero with AI Innovation. It'll be starting from 7:30 p.m. Please mark your calendars and make sure you are here. As far as we are concerned, in HR mentorship, learning never ends. And we are shameless learners. We continue to learn. So at this point, please, let's all unmute and let's all unmute and say thank you in our local dialects to our able presenter that has done justice to this presentation.
Thank you so much for today. Thank you for your time. Thank you so much. We enjoyed it.
Thank you.
Thank you.
Thank you, ma'am.
Thank you very much, ma'am.
Thank you.
Thank you very much, ma'am. Thank you so much.
Thank you.
Thank you. Thank you so much. We had a good time.
Thank you so much, Ma. So it's really enlightening. Thank you so much, Ma.
Thank you so much, Ma.
Thank you. Thank you.
It's
Good night.
been another beautiful time. Thank you, everyone. Do enjoy the rest of the weekend and see you tomorrow. Have a good night.
Good night. Thank you very much.
No. Good night.